afternoon, everybody. Well, let me put my video on and try that again. There we go. All right. Good afternoon, everybody. Welcome to this week's installment of C-Suite Snacks. My name is Steve Ronan, the leader of Citrin Cooperman's consulting and outsourcing practices and the host of today's webinar. C-Corps, sole proprietorships, LLCs, establishing your entity structure is one of the first and highest impact decisions that businesses make when starting out or often expanding. But what impact does that structure have on the cost and your ability to manage compliance on an ongoing basis when it comes to taxes? Today, we'll dig into some of the key differences in entity structure from that tax perspective. Ken Lax, a tax partner out of our Long Island office, will join us today to talk through some of these differences and answer your questions. As always, nothing in this presentation should be taken as advice on your particular situation, but Ken's contact information is available at the beginning and at the end of our webinar, and he'll be available afterwards. So if you want advice targeted to you and your specific situation, please feel free to reach out to him directly, or if you have an existing contact at Citrin Cooperman, you can certainly route your questions through them as well. A few administrative reminders before we start. We accept questions throughout the webinar, so please locate your Zoom's Q&A button and feel free to enter your questions into that as we go. These are quick sessions. We've got about 25 minutes with you this afternoon, and an efficient Q&A session will be enhanced by people pre-populating that window with your questions. And today I'm anticipating that we'll get several from all of you. So get your questions in early and often, and we'll get to as many as we can at the end. Finally, if you're here because you found it on our website or on social media, I encourage you to sign up for our mailing list and make sure that you receive an invite for our new snack size topics each week. Please also visit our C-Suite Snacks content hub on our website. That can be located at the upper right-hand corner of our main page. And there you can view recordings of previous webinars, download decks, and get contact information for who to reach out to for each specific topic. Without further ado, I'd like to introduce Ken Lax to begin today's session. Ken, over to you.
Thank you very much, Steve. And good afternoon to everybody. So today, as the title specifies, we're going to talk about business structures. So the first slide, we can go to the types of business structures. So we mentioned before, are these various types. So what I'm going to focus on today, though, is more in the LLC, the multi-member LLC, and the S Corp, because what I found in my 28 years of practicing is in the middle market arena, which is where my sweet spot is. Your 5, your to 25, 30 million of gross receipts is where a lot of these people a lot of businesses tend to structure. So just keep that in mind. I'm going to be focusing on that, but we'll touch on the other items. So let's begin. The next slide, please. So the sole proprietorship. So I think we all know typically what the sole proprietorship is. Somebody who's going to hang a shingle, decides to go into business. Very simple, very easy. You file your Schedule C, part of your 1040, and you pay your taxes based on the net results. Very simple and easy. As I said before, a lot of times businesses start out this way if it's a very small, small market that you think you're operating in to begin with. So I don't want to spend too much time on it, but one thing I did put down is when you're in a sole proprietorship, you might be thinking to yourself, well, how do I save for retirement? I don't have a salary, and my salary is what I make. I'm not paying myself because I'm not allowed to. I'm not considered an employee. So I put down the acronym SEP, which basically stands for Simplified Employee Pension. And that's a vehicle that the sole proprietor can avail themselves of to be able to put money away for their future retirement years. The only caveat I would say is that you must be cognizant of the fact that if you have employees working for you as a sole proprietor, you also have to contribute for them. So you have to keep that in mind for cash flow purposes, obviously, that if you do make a contribution to a SEP inside of your sole proprietorship, you have to make sure that you also cover your employees. Next slide, please. So here we're talking about the pros and the cons of the sole proprietorship. So the simple ones that we see, you have complete control, so nobody to argue with you about decisions to make, inexpensive. The number one issue that I find in a sole proprietorship as a disadvantage is that there is no wall. There is no limitation on liability. So there's no wall to protect your personal assets against litigation. And being in a society that sometimes can be litigious, you want to protect those personal assets. So that is the biggest issue. I mean, the other issues you see that are written down here, the issue I focus on is the unlimited liability. Next slide, please. So what can you do about that? You want to be a sole proprietor, you want to be a Schedule C, you're not ready to take that next step into more, more compliance, more, just more expenses. You want to stay small right now, but you're still nervous about your personal assets, which I wouldn't blame anyone for being. Well, single member LLC is a route you can take. You make an election. Is it a little different? Yes. Most everything is the same because the IRS looks at the single member LLC as the concept of a disregarded entity. So the IRS, in the eyes of the IRS, you're still a Schedule C filer, filing at your 1040 level with your tax return. But you go through an attorney normally, and you'll get this limited liability LLC set up in whatever state you're practicing in, and that gives you the wall that I mentioned before, the wall to protect your assets. Now, again, I'm not an attorney. You would always talk with your attorney to preface that things are protected the right way, but the LLC is a good way of putting that additional benefit in and still being able to stay in the smaller level if you still feel that's the level that you're at presently. Next slide, please. So, as I mentioned at the beginning, I want to spend the time here on an LLC. And for purposes of this conversation, the LLC that I'm talking about is the LLC treated as a partnership. The reason I say that is because it could be treated as a corporation as well. But for the purposes of this discussion, assume it's a partnership. So it's a partnership, anything with more than one person. Can't have a partnership with one person. So, two or more is a partnership. Partnership is still a simpler form because it's really, especially as a form, which is the 1065 form that you fill out for the IRS, it's informational. And all the information flows down in its various characteristics of income. And you're going to pay tax at your individual level. And normally, and I'll preface this with normally, there's no tax paid at the LLC level. Next slide, please. So the pros and cons of an LLC. So let's start with the LLC, the limited liability company, the disadvantages. Yeah, there are extra fees in certain states. So what do we have to be cognizant of? What states we're practicing in, because we want to look to see, are there additional filing fees, not income tax, filing fees that no matter what income you make, even if you have a loss, you're going to pay fees, because those fees will be predicated on the gross receipts that you're generating in those individual states. New York is a perfect example of a filing fee based on gross receipts. So it's just always good to understand, because if you're at the beginning of the company and you're having losses, which is common, you just don't want to be surprised by filing fees saying to yourself, oh, but I have a loss. Why am I paying tax? Well, you're not paying tax. You're paying a filing fee for the opportunity to do business in that state. California happens to be another one with a relatively onerous filing fee. But there have been case law in the past that has helped to lessen that in certain situations. Net income subject to self-employment tax. We'll get back to that in a minute. Membership consent is needed, but not really. Depends what the operating agreement says. So in there is where you can put your do's and your don'ts, and who can transfer, who can't transfer. So that's the operating agreement is really the architectural plans for the partnership. Very important to have. And again, it dictates and governs a lot of things. Switching over to the advantages. Okay, well, limited liability, best advantage, just like with a single member LLC. Where we're going to talk about flexibility in a minute, I just wanted to say it's a good vehicle to hold assets in. Why do I say that? Picture putting a building into an LLC 10 years ago, and then now trying to get the building out of the LLC. You don't want to sell it, but you're looking to move it, maybe a different form or structure. There's no tax on the appreciation, and more than likely there's been a lot of appreciation on that real estate. If you just take it out and you don't sell it, no tax on the appreciation. Whereas you'll see later in an S corp, there is tax on the appreciation in the asset. Key difference. Also a lot of techniques to be able to move assets from one generation to another. Being able to offer discounts because maybe the ownership share in the LLC you're going to offer to your child is not going to have a voting interest. It's not going to have really any kind of control. So you can discount it down and move assets at a much lower valuation. So a very, very good tool that a lot of trust and estate professionals will use. Now flexibility, greatest adjective to use for an LLC is flexibility. Like with real estate, location, 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 flexible, flexible, flexible. What you put in that operating agreement, you can do a lot of different things. I typically have clients that have LLCs that will create more than one membership interest, because an LLC holding is called a membership interest as opposed to an S corp, which is called a shareholder interest. Membership interest, I could have a Class A and a Class B. Maybe Class A are the people with the know-how for the business they want to open, and Class B are the people with the funds and the capital to put in. Now that's a perfect marriage. Put them together, and now you can have a great business with the ability of both to contribute. And normally in the section of distributions in that LLC agreement, it will more than likely say that the Class B shareholders will get all their money back and even a VIG on top of that before the Class A shareholders see anything. Now you're going to say to yourself, that's not fair. Class A shareholders bring all the know-how. Okay, well, I would agree with you, but there are ways of getting money out. Now, a partner in a partnership or a member is not an employee, so they can't take a salary, but they can take money out. It's called a guaranteed payment. And that's a way that the partners can take money out in forms of guaranteed payment as Class A's, even though they can't get money out yet until all the Class B shareholders get their money back. So flexibility is very important in the LLC. Anyone can be a member. You can have as many owners and members as you want. There's really no limitations, whereas in the S corp, the adjective for an S corp is rigidity. Next slide, please. So an S corp, and we're going to compare an S corp and an LLC in a later slide. But right now, the S corporation, what is it? It's a corporation that's files. You get the lawyers to set up and form all the documents, and then there's a special election that is made that converts the C corp to an S corp. So you have to make sure you file that federal election, and there are timing issues on when you can file it. And you have to make sure it's filed within that time, although there are relief methods and procedures to avail you of an election, even if you're late, because the IRS is very high on S corps. So they usually, I've never seen a late S election not granted. Important to note, states, not all of them follow the federal. So you might file an S election and then all of a sudden think, oh, okay, the state, will follow the S. I'm an automatic S in the state. Not necessarily the case. New York has its own S election that you have to file. So you just want to be cognizant of those different things. You don't want to wind up with a federal S and a state C. Now, sometimes that could be beneficial, but you just don't want to be surprised by it. Okay. Again, S corporations are very rigid. Can only be a domestic corp, as we've put down here. Can only have more than 100 shareholders. Very rigid on who can be an owner. And the corporation, like what we discussed before with the Class A and the Class B, would never work because that's indicative of more than one class of stock. So the S Corp is rigid, the LLC flexible. Next slide, please. Okay, so now pros and cons of an S Corp. Okay, so I'm going to skip over IRS scrutiny because we're going to get to a slide with an example. Taxable fringe benefits. Well, typically we know that if you're greater than a 2% shareholder in an S corporation and your health insurance is paid for, that's going to be part of your income and get added back. But you can also take it as an above the line deduction. And the same thing happens in an LLC. It's not as, you don't have a salary, but it's a guaranteed payment. And you can take it as above the line deduction. Disadvantages, you have to keep your eyes, peeled to make sure you cover all your elections. I don't say that a calendar year is necessarily a disadvantage, but it's just one more thing to keep track of because S Corps can be 9/30 year ends and forward. They can't be anything prior to 9/30, so you can't have an 8/31 year end. But S Corps can be 9/30 year ends and forward. So you just have to track it because there are other filings that go with that that the IRS requires. And again, the rigidity that you just have to, I feel like with an S corporation, you've always got to be watching to make sure you don't run afoul of anything that will cause you to lose your S election, which we'll talk about in a minute. Where with an LLC, there's nothing really out there that you're going to run afoul of because you can have, you can have whoever you want as an owner. You have the flexibility as long as it's in the operating agreement. So it is an easier structure to keep track of. Both are pass-through entities. So an S Corp on the advantage part does have a flow through. You pay tax normally at the individual level. Again, I say normally, sometimes you do pay tax at the top level, but we're talking in the normal circumstances. The assets, again, you have that veil again to protect against any invasion of your personal assets. We'll skip tax favorable characteristics of income for a minute. Transfer of ownership is pretty easy as well. The only thing, you can't terminate the S status election without at least 50% consensus among the shareholders. And you're not supposed to, and they usually put in an agreement, do anything that would jeopardize your S status. Cash method of accounting, well, that's typically most S Corps, unless they have inventory, are allowed to use cash method, as well as LLCs. You only see the accrual method requirements when you're in the C Corp structure. So let's go to the next slide, please. C Corps. I don't want to spend too much time because typically, as I said, the middle market arena does not really go into the C Corps, although there are many C Corps, but what I've seen predominantly is mostly S's and LLCs. But what I will say about a C Corp, similar to the S Corporation, there is state level filings and legal papers to generate, board of directors. And let's go to the next slide. Biggest issue about a C Corp, which I'm sure we're all aware of, double taxation. So I earn money, I pay tax inside the S Corporation. And when I want to take money out, I pay tax when I take the dividend out. Biggest downside to a C Corporation. There are different issues when you sell. You could create certain circumstances to get rid of some of that double taxation with personal goodwill, but that's a topic unto itself. I'm just mentioning these things just so you're aware of them. And then the advantages, of course, easily to transfer shares, easy to generate income from capital raising, perpetual existence, limited liability. But let's move on to comparing the LLC and the S Corp. So next slide, please. So here I wanted to just bring to, everything together and talk about the LLC and the S Corporation. And what we talk about here is where the LLC is a self-employed company with the tax that you have to pay. S Corp, you do have a concept of the employee, where an owner can be an employee. I quickly want to talk about basis. It's an important concept for both LLCs and S Corps whenever you structure. And probably a lot of you know basis is what you can take as losses is your basis. I put $100 into a company, my basis is $100. Typical computation for basis, income, plus what I earn in a year, capital plus income, less loss, less distributions. Biggest difference between an LLC and an S Corp. LLCs can create debt, recourse debt, and at the end of the day, use that as additional basis. Whereas S Corps don't have that ability. The only ability they have is to make shareholder loans to increase their basis. But proceed with caution. I have basis of $100 and I take a recourse debt inside the LLC. So now I have another $10. So it gives me $110. I have a loss of 105. So I take that whole 105 because of my recourse debt. Now in the next year I pay off the loan. Well, now I don't have that recourse debt anymore, and now I could have recapture of because I have excess loss that I took in excess of my basis. So just to keep in mind. And again, the ownership is very flexible. But one of the things I wanted to mention, how do we cut down on compliance? Very common way. S corporations, I have 6 of them. I could go in and through some restructuring, I could wind up with 1 S corporation and 5 Q subs, qualified subsidiary of the S corp, which is also deemed by the IRS to be a disregarded entity. So now what happens? 6 filings for tax filings become 1. Nice tax savings. LLC, same thing. LLC, I have 6. A little restructuring. Now I have 1 LLC with 5 single member LLCs. So now disregarded entity for the single member LLCs, and I go from 6 filings to 1. A nice way of decreasing compliance costs. So I wanted to mention that, as well as I put down the AAA account for the S Corp. That's the scorecard for an S corporation. What's going on since the S Corp started? It's important to note because a lot of S Corps used to be C Corps for a while. Sometimes it's just not a quick formation and then an election. So you want to be able to separate the earnings and profits that are generated inside of a C Corp and the income that's generated inside of an S Corp, because one is subject to double tax if you pull it out, one is not. Next slide. Pitfalls of an S corporation. So this is where I wanted to talk about the income comparison. And what we're saying is with an LLC, there's no concept of salary technically. So you just, whatever flows down to you that's ordinary income from the business, you pay regular tax and your SE tax, which is your payroll, your FICA, your Medicare. And you pay double because you have to cover the employee and the employer's share, although you get a deduction for half. In an S Corp, no, you are an employee, but you have to be careful. Here I said I have $1 million of profit. I take $100,000 as salary and $900,000 in distributions. So as an S Corp shareholder, I'm going to pay income tax on everything, but I'm only going to pay SE on 100. Well, guess what? The IRS will look at you and say, well, is that reasonable comp? And there are reasonable comp audits that I've been part of over the years. And I can tell you, they come in and say, well, you know, a lot of factors. How important are you? What's the work you're performing? How do you compare to others in your field? How many hours are you working? And I've had many a case where the IRS will say, you have to start taking more salary, and will adjust prior years. So it's something to be very cautious of. Reasonable comp is something the IRS is always focused on. And again, going back to the S Corp, that's not one, you know, that's a savings, but also as IRS scrutiny, as we mentioned in a prior slide, that you don't want your status to be jeopardized. So you're always looking at various issues for your S Corp. I feel like you're always just have to be cognizant of what could come up. And there is a rule for passive income and gross receipts in excess of 25% when you have E&P that you could violate your S election. So just things to be cognizant of. And next slide. The pitfalls of an LLC. Well, again, you have your self-employment tax and things to that nature that you just have to make sure you're used to, because now you're going to be paying estimated taxes. But you also have to keep in mind one thing I didn't mention in the slides is buy-sell agreements. You want to make sure in an LLC, you have a buy-sell agreement. God forbid something happens to the other partner. How do you want things to continue on? And it's going to be similar in an S Corp as well, but LLCs are more commonplace to have the buy-sell agreements. And another thing for both S Corps and LLCs is higher filing fees, looking at state taxes, not to trigger nexus under service, when you're a service industry, under the market-based or cost of performance rules, or under a law that's known as Public Law 86-272, allowing you to just sell within a state without triggering nexus when you're talking about tangible property. So things you just want to be aware of once you structure and now you're going to be operating. And again, with the sales, an LLC, a sale of an LLC, capital in nature, but you make sure you have to trace inside to make sure you have not what's known as hot assets under 751 of the code, which is AR or inventory, and that's ordinary. And then with S corporations, similar with asset deals, they'll structure, and then ordinary treatment and capital gain treatment on the sale of capital, when people are willing to step into your shoes. Next slide, please. So at the end of the day, what's the best structure for your business? There's no one all. At the end of the day, you work with your attorneys, you work with your accountants, and you see what works best for you. But I've seen mostly people want to protect against personal loss, so they protect their assets. So that's what I have basically seen for the most part, but it's all going to be dependent and predicated on your situation. Next. Well, I think that comes to the end of my slides, and I'll turn it back over to Steve. Thank you so much.
Thanks a lot, Ken. So a few questions have come in, and they're a little more technical for this particular session. So I'll just kind of run through them. So if we go back to your pros and cons slide with respect to LLCs, can you talk to whether those pros and cons are specific to LLCs that are filing as partnerships only, or are those pros and cons for all LLCs, including S corps or others?
Sure. So when we're talking about the pros and cons of LLCs, it can be also when if they're C corporations, not necessarily, but S corporations, you could have those pros and cons are still going to be there. Advantages are still going to be there as far as when you're a C corp. But I just want to quickly go back. So flexibility, okay. Pros and cons of LLCs. If you're taxed as an S corp, no, you're gonna be rigid because you're an S corp. You're not gonna be able to allocate anything. It's not good. So depending on how you're taxed, and how it's called check the box, which we won't get into. An LLC operating as a different entity can be quite different than what the advantages and disadvantages of an LLC are as a partnership.
All right, great. Do corporations not have revenue-based filing fees at a state level?
Do C corporations not have revenue-based filings at the state level? No, that is not the case. And it's a very good question. They still are subject to certain states to franchise fees, depending on gross receipts. But then it's usually the lesser all, but it depends on the state.
And then, we get this question a lot, right? How difficult is it to change a 20-year-old C corp to an LLC?
It's not difficult. The problem is that you can do it via a check the box, but then you have to look at the appreciation inside of there, because then it could be deemed, and again, I'm not a mergers and acquisitions expert, but it could be deemed liquidations. So you have to be careful with those elections.
And then we can wrap it up with just one more question since we're right at time here. You mentioned the Q sub concept. Is there an election for that is similar to an S corp election?
Yes, there is an election. Very good question. There is an election for the Q sub that has to be made by those entities, similar to the timing of the S election. in order for those entities to be qualified as a QSO.
All right. Well, Ken, great discussion today. Very helpful overview. Thanks very, very much for putting this together and joining us. For all the participants, we're going to leave Ken's contact info up on the screen for another minute. Allow you to take down his email address and phone number if you'd like to contact him with further questions. The deck, the recording of this presentation, and his contact information will also be made available on our content hub after this meeting, and that will be distributed by email to you when it's posted. So to everyone who joined us today, thank you very, very much. The custom that we have is a snack basket giveaway. We've got a nice craft basket of cupcakes that we'll give away to a lucky participant from today's meeting. And Robert Pruitt from Opus Private Client, you are today's winner. So somebody from our team will be reaching out to get shipping information for you. So congratulations, enjoy the snacks. Speaking of snacks, next week we're going to get into the weeds a little bit. We're going to be joined by Mitzi Keating, who is our advisory leader for cannabis. And she's going to be giving us an overview of the industry, talking about what is the industry itself all about, what are the subsectors, and where's it going from sort of a regulatory and growth perspective. So join us next Thursday at noon to get into cannabis. For anybody who's involved in restaurants, the 13th is for you. The topic is going to be ensuring the success of your restaurant business, especially from a sustainability perspective as we recover from COVID. We'll be joined by Stacy Gilbert, one of our co-leaders of our restaurant practice and managing partner of our New York City office, as well as Denise Koch, who's a principal in that practice. Once again, I'd like to thank everybody for joining us today. Please sign up for our mailing list if you're not on it yet. Visit our content hub, and we hope to see you back here next week at 12 p.m. on May 6th for our cannabis session. So have a great rest of your week, and we'll see you soon.